Hello everybody, Carlos here from Side Effects and welcome to another forecast video. Today is December 8th, 2013. Let's get right into the forecast review. Alright, we were looking for a no trade on the British pound, buy setup using synergy zone on the euro dollar, no trade on Australian dollar, and sell trade setup synergy zone using the Japanese yen. Starting over the Japanese yen, market got into the synergy zone. We do our pivot step setup. That will be the only one. We never got an entry. Crosses the moving average and reversed towards the upper side, and eventually news reaction report on the non-farm payrolls came about. Usually we don't trade at this high impact level, so this would have also kept us out of any trouble. So we didn't take any trade whatsoever because we never had an entry trigger, meaning break of the support line, crossing with the moving average back down. So having said that and having done that, we go to the 4-hour chart, see where we're at, and I see a retake of the high, but they failed to take it. Now this retest and possible failure could represent a couple of things. We go to the 4-hour chart, and once again, we're coming off the 20 level, so that looks like more of a intended move towards the upper side. So we're gonna try our luck based on price action uh, in favor of the upper trend and the momentum of the MACD turning into potential upward movement. So a pullback between 0251 and 0226. We're going to be targeting 103.56, 83, and 104.24. All right. So this is what we got for the dollar yen. We had no trade on the Australian dollar, but based on the news reaction, take a look what the non-farm payroll does. This is the reason we should stay out of the market. The market dropped. This was amazing. The market dropped, let's see, about 83 points right off the bat and recovered all of them. This is all stop loss hunts. Everybody that thought that the market would continue to the upper side and were placing their stop, just exactly where they were, the market just completely took them all by surprise. And now here's a good training mode. You see this low right here? Let's just plot the low right there and see how many points or pips on an extremely volatile news reaction the market actually push it all the way down to take all the stops, and we drop it all the way here. We're talking about 9 points, additional from this low. Okay, so as you can see, a 10-point average, it's always the market is always able to stretch and take those stops. That's the reason we usually go for 15 to 20 pips in the direction of the when you're placing the stop against the trend that you're taking. This is a very clear pattern of explanation. The reason why we go into the at least 15 to average 20 place stops on those pivots that they have been left behind as our stops. All right, we're looking for the 4-hour chart. All right, so wide apart, pointing upwards all the way to the 80 level, where they were supposed to go. Remember what I talked to you about of divergence here. Market coming down, and the MACD not coming all the way below the 20 level. So it's kind of coming through right now. We're looking for a pullback at 90.86, 90.50, and all the way up to targeting the 91.83, 92.05, and 92.34. Let's see if we can pull this one out. Now, the next thing, the same thing will apply. This huge movement, although the market is continuing towards the upper side, they did not take the most important previous high. It usually happens when they take those high by a lot and then continue confirming the trend. So we don't actually have a real clear upward trend until we take these highs. But price action, once again, MACD is telling me that we should consider an upward movement. Let's see if we can play that out. The best trade so far, depending on how you trade it, was a euro dollar. And here's how it looks. Here's a pivot step where we're looking for a pullback on the area of 36.21 and 35.85. And the market never pulled back toward that level and gave us an entry, meaning we should have placed our stop since we were pretty far away from the zone, about 15-20 points, and that will put us right around even on the 20 we got stopped out. You see that level, so it really sucks on that level. Now the market just touched the zone amazingly as predicted, even on the high impact news report. So I got stopped out. I saw as soon as I saw the market reversing on the other back end here, the market indeed continued towards the upper side. So I re-enter the market and recoup my loss right there. And in this case, I lost about pretty much to, I think it was 42 points. That was my stop, pretty much over all the way down here. So I really lost about a little bit beyond what I was supposed to. But I tried to play it and it didn't work out for me. So I got stopped out at 42 points. Now the market, I re-entered the market on after the non-farm payrolls, the close this level. So I got about 15 points, a total of about 42. So I kind of broke even. I lost probably, let's see, what was a total of about, I think, $22 in the total. But it was a good recovery from this stop loss hunt that it happens here. It sucks because we were right on the trade, on the trend, and where the market we should go. But I I failed to follow my own rules in terms of waiting after the report. I never thought that the report would actually take such a huge step in this direction, but I risked it, so it cost me dearly. I was able to recover it though, but let's see how that works out eventually. I'm being 100% transparent and open that not everybody, yeah, I mean, not all the time we nailed it. All right, so we sometimes traders and even that I've been following through for so many reasons try to take a little bit more risk than usual, and it cost us. So I would like to be 100% transparent with you guys so here so you understand what we're going through. All right, so here's a 4-hour chart, wide apart above 80. I feel uncomfortable taking any more trades up until this time. Price action is in favor. The width of the moving average on the 4-hour chart is definitely in favor. So I'm going to play it out one more time. Okay, so I'll drop down to the 1-hour chart and analyze the market. All right, so this is what we got. A pullback between 3680 and 3655, quite tight. Targeting the next level of target of 3737, 3755, and 3786, quite tight as well. But it looks like it's running at the same time with the speed of the momentum and of the 4-hour chart, which indicates a little bit of an overbought conditions on the of this market. So I'm looking for a healthy pullback. Okay, so hopefully they pull back a little bit and continue on, but if not, this is what's going to happen. I'm seeing here the tendency for the market based on price symmetry, a very healthy pullback way beyond the Zenith zone right there. So we can see a huge pullback between these two lines here that could represent a further decline. I hope that will happen after the last try of the market coming back into the zone, retesting those highs, and then taking this symmetry pullback as expected. But if not, well, you already know the drill. We'll wait for the pullback, pivot step, break of the line. We confirm that entry and we get in. We confirm it. How we confirm it? With a close above the line, at least on the 1-hour and 30-minute charts. We go into the 1-hour chart, see the cross of the moving average, possibly on the 30-minute as well. Once I leave the pivot below, if we are in the zone, we use a price stop beyond or below the 36.55, about 5-10 pips below that point. I mean, sorry, 15 to 20 pips below this point, and I explained to you the reason why. I don't want to get caught up on the pullbacks here on stop loss hunts. And after that, we're going to be targeting 20 to 40 pips, liquidate half of our positions, or targeting the remaining of the objectives here. And that's what we got on the euro dollar. I'm sorry. Last but not least, we got British pound, and the British pound was a little bit of a mess. Here's a 4-hour chart. We go to the 4-hour chart. MACD below 20, and the market, although drifted downwards, it was completely chaotic here. So you can see this is a market not being able to trade. So we're going to be standing outside of this trade. All right. So as a reminder, we're looking for a buy setup short one. Very careful on this one. I repeat, very careful on the on the euro dollar. We got another opportunity buy setup using synergy zones on the Australian dollar. Okay, now the other reason that I forgot to mention is because the pivot still has been broken. Let me show it to you. I'm using these two guys right there. Right, 1, 2, and the market just broke above that. So we're just looking for a pullback because we got a confirmation on the cross of moving average as well on the 4-hour chart. So that was the confirmation and the reason why we're looking for a synergy zone. And last but not least, the yen price action has indicated an intended move toward the upper side cross of the moving average as well. Although I don't feel quite comfortable with it, honestly. Why? Because this high did not take this high. That will give me a hint of being careful about taking this trade. I just want being straight honest with you. So let's just be careful on the euro dollar, on the and the dollar yen as well. Euro dollar and dollar yen. Be careful on these trades, but price action is indicating that we should continue in this direction. So let's just see how that happens. This is Carlos here from Forex FX, and I'll see you in the next forecast.